Welcome back to another Explainer. Today, we're tackling a subject that literally everyone deals with, but honestly, very few of us completely understand. To make this super accessible, we're leaning into a brilliant metaphor from our source material. Picture a monkey working hard on a banana farm and getting paid in leaves. I know, it sounds a little silly, but stick with me. By the end of this Explainer, you are going to have a razor-sharp understanding of global finance.
So let's dive right in. Imagine what happens when our monkey finishes a long week of honest, back-breaking labor on that banana farm. The monkey is thrilled, right? It ain't much, but it's honest work. But literally the second payday arrives, something inevitable happens.
And this perfectly captures the core concept. Let's say our monkey earns exactly 100 leaves for the week. Well, the monkey doesn't actually get to take all 100 leaves back to the treehouse. Instead, the monkey government steps in and scoops up 20 of those leaves, leaving our hard worker with only 80. That, fundamentally, is tax. It's the cut of leaves every single monkey has to hand over to the government, even if they really don't want to.
Now you're probably wondering, why do we pay these taxes at all? Well, the monkey government needs those leaves to literally keep the jungle running. They pool everyone's collected leaves to fund a huge, incredibly diverse range of public goods and services. We're talking the absolute essentials, like housing, hospitals, schools, police, firefighters, and even garbage collection. But it also pays for the big picture stuff: art galleries, public broadcasting, scientific research, and yes, believe it or not, even monkey space programs.
Okay, moving into Section 1, the many types of tax. Let's look at all the ways you end up paying those leaves. What's fascinating here is that monkeys are taxed at almost every single turn. The one we all know is income tax, where the leaves are taken straight out of your paycheck. But there's also sales tax, meaning you pay an extra leaf just for buying a banana. What if our monkey buys a treehouse? Bam! Property tax. If they sell that same treehouse later for a profit, that triggers capital gains tax. Big monkey businesses, they're paying corporate tax. And if a monkey happens to inherit a bunch of leaves from a wealthy relative, you guessed it, inheritance tax.
And it doesn't stop there. Beyond the everyday stuff, there are some highly specialized taxes. For instance, you've got tariffs, which are basically taxes slopped on imported goods brought in from other monkey countries. Then there are environmental taxes. Those target corporations whose actions are actively damaging the jungle. And we even have luxury taxes, which hit the really expensive, totally unnecessary items bought by monkeys who have way more leaves than they know what to do with.
Let's roll right into Section 2, beating the bracket myth, and figure out how much tax is actually owed. Okay, pay super close attention to the math here, because this specific thing trips up so many people. Say a monkey makes 100,000 leaves, and the top tax bracket is 22%. They do not pay a flat 22% on the entire 100,000. That is the bracket myth, and it's totally false. Here's how it actually works. Those first 10,000 leaves, taxed at 0%, free and clear. The next 40,000 leaves are taxed at 12%, which comes out to 4,800. Only the final 50,000 leaves actually fall into that top 22% bracket, costing 11,000. So the grand total owed is 15,800 leaves, not 22,000. You literally only pay that higher rate on the leaves that fall inside that specific top tier. It's a total game changer once you get it.
Moving right along to Section 3, filing, deductions, and audits.
So, if you're a regular employee, the government usually just grabs your leaves automatically. But if you run a business, you've got to file a tax return. This follows a pretty standard global process. Step 1, count up the total leaves you made for the whole year. Step 2, check exactly how much tax you've already paid. And Step 3, this is the one everyone obsesses over, calculate and apply your work-related deductions.
Now, it's absolutely vital to understand that deductions are not just free leaves. It's not an excuse to go buy whatever you want. They have to be strict work-related expenses. We're talking uniforms, specialized tools, professional training courses, business travel, that sort of thing. You send all this math over to the monkey government, and here's the best part. If everything balances out and it turns out you overpaid during the year, the government actually sends you a tax refund.
But if a monkey claims some highly suspicious deductions or tries to hide extra income, they're going to face a tax audit. An audit is really just the government double-checking your math because something smells a bit off. And depending on what part of the jungle you live in, you'll answer to some pretty intimidating enforcers. In the US, it's the Internal Revenue Silverback Gorilla, or IRS. Down under, it's the Australian Taxation Orangutan. And over in the UK, you're dealing with Her Majesty's Revenue Capuchin.
So what happens if you just flat out refuse to pay your taxes to these authorities? Well, it triggers a pretty rapid chain of escalating consequences. First, they'll issue a warning. Then they start tacking on interest, which means you suddenly owe even more leaves. Next, the monkey government will literally start forcibly seizing your leaves. And if you still refuse after all that, it ends in complete insanity and a very real trip to monkey prison. Definitely not worth it.
Let's move on to Section 4, How Rich Monkeys Dodge Taxes, and look at the completely different rule book they seem to play by.
The divide here is honestly striking. A regular working monkey pays standard full income tax on their weekly leaf paycheck. But the rich monkeys? They focus their wealth entirely differently. They own stocks, properties, and collectibles. When they sell those assets, it gets taxed as a capital gain. And get this, capital gains tax is generally only about half the rate of the standard income tax that the working monkey is paying. Wild, right?
Wealthy monkeys also use these incredibly sophisticated investment tax breaks, like a strategy called negative gearing. Imagine a rich monkey buys a treehouse and rents it out, but it actually costs them more leaves to maintain it than they make back in rent. So they're losing leaves on paper, but they can claim that loss as a massive deduction to shrink their overall tax bill. They gladly take the short-term hit, pay way less tax right now, and just wait for the treehouse's value to skyrocket down the line. It's a classic rich monkey move. Another major strategy is just packing up and changing where the business operates entirely. Not all monkey countries charge the same rates. So if you want to dodge high-tax environments, like Finland at 57%, Japan at 55%, or Australia at 45%, wealthy monkey businesses will simply set up shop in zero-tax havens. We're talking places like the Cayman Islands, Dubai, or even Antarctica, which all offer 0% tax rates. Though to be fair, Antarctica is mostly 0% because, well, no monkeys actually live there.
So, what's the big practical takeaway for you here? How do you protect your leaves and stay out of monkey prison? You basically have two options. First, track your budget meticulously. Save every single receipt for any expense that might be tax deductible. Second, if you just want to relax and eat your bananas in peace, go ahead and hire a monkey tax accountant. They handle all the complex paperwork for you, and the absolute best part, their professional fees are often tax deductible themselves.
It is totally worth noting that figuring all this out has always been a messy process. Taxes have been wildly controversial since the literal dawn of the jungle. For example, back in the early 1900s in the US, there was a massive, real-life debate over how to tax bananas. Importers argued fiercely over whether bananas should be slapped with a luxury tax or protected as a daily necessity. And in some of the darker corners of history, untaxed bananas were actually used to literally bribe tax officials for special treatment. You can't make this stuff up.
Which brings us to the end of our explainer today. As the old saying goes, there are only two guarantees in life: death and taxes. Well, and bananas. As you step back out into the dense jungle of financial literacy, I want you to ask yourself a question. Are you strategically optimizing your leaves, or are you just walking around blind, waiting to slip on a banana peel? Think about it. Thanks so much for learning with us, and we'll see you in the next explainer.